welcome back to Consumer Says. I'm Sophia, and I'm here with my co-host Kayla. Hi, Kayla.
Hi, Sophia.
We are going to discuss primarily labor today, and we'll get into what the motivation is for that and why labor is important right now. But before we get into that, we're going to do a quick temperature check on spending, including overall spending, retail spending. So I wanted to check in with you, Kayla. You're our resident expert on spending, to see how you would classify the temperature of spending right now in the U.S. economy.
And it's funny because I knew you were going to ask that question, and yet it's still very hard for me to come up with a temperature, even though we on our team spend so much time thinking about consumer spending. The reason it's hard, well, the reason it's hard really is something that kind of a discrepancy we've been seeing for a while with spending. If you look at top line numbers, things have stayed decently strong. We just had a pretty decent retail sales report, both including and excluding autos. It's like pretty strong growth. It's positive year over year in nominal terms, and we've tended to see decent personal consumption expenditures also, which is really a broader measure, including more services than the retail part. We haven't had it for September yet, but based on that goods component, it looks like it could be pretty decent. So, based on those top line numbers, I'd say, it's cooled a little bit, but it's still maybe high 60s, 67 degrees, something like that. That being said, in a lot of our data looking directly at what consumers are saying, we've continued to see just a really strong divergence between sort of that lower income and increasingly middle income consumers as well versus high income adults. And in our data, because we tend to kind of look at that sort of average median everyday consumer, which is excluding a lot of those higher income spenders, spending looks pretty weak. And it bumped up a little in September, but it still looks pretty weak. So it's okay, but pretty, it depends on which consumer experience we're looking at. Would you agree with
Yeah.
that?
Yeah, I would agree. I think something we've been seeing in our data now for a while is that after the pandemic, when things began opening up, income inequality actually reduced a bit when wage bargaining power seemed to be strongest for those who were in more service working jobs because people needed service workers to reopen the economy. But those effects have started to wane and maybe actually move in the opposite direction. Whereas now we see higher income folks thriving more than ever before. The stock market's doing great. The tech layoffs and all of the banking layoffs and things like that are in the rear view mirror. So it seems like they're doing pretty well financially with their jobs, with their investments. On the other hand, can't really say the same thing for especially the lower income and sometimes some of those middle income consumers. And so that's kind of where we're seeing a mismatch in some of Morning Consult's average consumer spending data versus the aggregate number for the whole economy, which includes all kinds of spending from businesses to, very wealthy people. So it kind of hides a little bit what's going on with income dynamics. So unfortunately, it seems that those effects seem to be increasing month over month. September, we had a brief reprieve, but we'll see how it manifests itself going forward. I think, unless there's anything you have to add, I think this is actually kind of a good pivot into the labor market because this is part of the reason why labor is such an important topic right now because this is how people are able to afford their spending, especially now that excess savings have dissip- dissipated. Um, so let's talk about labor.
Let's get into it. Yeah, I know. I mean, following on that, I really, because exactly how you described it, I agree with. And it kind of seems like the closer you are to living paycheck to paycheck, to not necessarily having these extra savings or other income streams, the closer you are to paycheck, the more you may have been suffering as inflation kind of bit into those wages. So I think that's a big part of it, and you're right. A good segue to sort of this labor discussion and what we're seeing with these paychecks and having jobs at all.
Yeah, so Soft landing. The Everyone talks about a soft landing. What is a soft landing?
That's a great question. Actually, I feel like right before this call, you were saying a good description of it. I mean, and why we're talking about the soft landing now is basically because the Federal Reserve has kind of switched from continuing to raise interest rates to fight inflation to now reversing course, and they cut interest rates once, they're expected to continue cutting interest rates, and that's kind of a signal that the battle is either won or going to be won against inflation. But then the question there is what happens with the cooling for the rest of the economy.
Yeah. So the Fed has a dual mandate. They're worried about keeping inflation prices stable and keeping employment maximum. So when they're raising rates, they're a little bit more worried about inflation or if they're holding rates steady. When they're cutting rates or they're talking about cutting rates, they're a little bit more worried about labor market or maximum employment. So we've now moved from the world where inflation is the main enemy, the main problem that we're trying to tackle, to now, okay, the labor market's starting to slow down, so we need to sort of put our eyes on that and be more worried about that than inflation. So that's the big inflection point, and so that's what a soft landing, this magical soft landing, will we get it, will we not get it? It looks like we could, but in order to do it, we would need inflation to continue to keep coming down, which we had not the best CPI report last month. And we need the labor market to not cool too much to the point where maximum employment would be harmed. So that's why labor is so important these days, and everyone's paying a lot of attention, because that will determine if we land that soft landing and how we basically did we come out of this high inflation period unscathed in terms of the economy as a whole. So you wrote a labor report that came out yesterday, and it goes into a bunch of these topics, but we're going to scratch the surface here to just talk about the main takeaways. So how would you assess where we're at on the highest level right now with the US labor market?
Yeah, and it's really interesting because, again, looking at top line numbers, kind of a similar story with what we saw with inflation, but also kind of different. Looking at sort of these biggest labor metrics, like something like the unemployment rate, it's not very high. It's come up, but it's not very high, historically speaking. And we see that in our data too with our unemployment index. So over the past year or so, it has been rising, but it's still not historically at a worrying number. So that tells you, okay, the labor market maybe seems okay. Another good sign is we have really not seen layoffs pick up very much. There's little surges sort of specific to certain industries. Like last year, we had a lot of tech layoffs. I'm sure people remember. And every now and then you'll hear about some, layoffs over here, layoffs over there. But if you look at the overall jobless claims, UI claims, and also our high frequency measure of lost pay and income that we look at on a weekly basis, it's stayed like pretty flat. It's above its historical low, but it's stayed pretty flat.
Just to jump
Um,
in really quickly with the layoffs thing, I'm glad you mentioned the news versus the actual numbers, because I think this is something that a lot of people get confused about. I think a lot of the layoffs we saw in the news last year, especially, where they were focused in companies that just get a lot of news time and get a
yeah.
lot, just draw a lot of headlines and a lot of attention. And so people felt like there were a lot of layoffs. But in reality, when you look at our lost pay data and just other government measures of layoffs, there wasn't really a huge blip, and that has not even come into fruition today as well. There's not more layoffs than ever. There's not anything concerning
Yeah.
there in those numbers.
Yeah, it's almost like they were high profile but not high volume.
Yeah.
So yeah, that's a great point, Sophia. And I think another thing looking at these numbers that sort of might be confusing to people is how did unemployment rise so much if layoffs have kind of stayed so low? And
Yes.
that's one of the things that the report really digs into. I mean, for one thing, we've seen, and we've written about this separately, there's been an influx of new workers to the workforce. And so what's happened there is that it's what's really allowing the unemployment rate to creep up and the labor market to soften has really come more from firms hiring more slowly, and just yeah, it's fewer job openings, slower hiring, slower job gains. And so, as these new workers or prospective workers are entering the labor force, it's taking longer for them to find jobs. Or if you do leave your job or you do get laid off, even if it's a small number of total layoffs, all of them are staying in that unemployment pool for longer, because it's just taking much longer to find a job. And that is a signal that we saw pretty strongly in some of our own survey data that we ran, to dig into this issue, asking consumers if, or workers, if who were actively applying, whether it was easier or harder to find a job than a year ago. And overwhelmingly, people were saying it's getting more difficult.
Yeah. And wasn't there also a perceived difference between those who did and didn't have a job on if it was more difficult to find a job?
Yeah, and that was really interesting. Those who are employed, there was a slightly higher share. I mean, in both cases, whether they have a job or not, those actively looking for work said, it was were more likely to say it was harder than a year ago. Those that did have a job had a slightly higher number saying it actually had gotten easier, but it was still less than the share who said it had gotten at least somewhat harder than a year ago.
Yeah. And so basically, employment levels right now are fine. The unemployment level is still low when we think the unemployment rate is still low when we think about history, but it has been moving up, and we've seen that with our unemployment index. And just to wrap up what you said, basically, it's more of a supply, an increased supply will always make the unemployment rate go up because it's a function of the labor force participation rate. We have people entering the labor force participation rate for or labor force for different reasons. So the unemployment rate was just kind of a function of that. But then we see job openings as a whole also just going down. So the pace of hiring, consumers have picked up on it from our surveys. They say that it's harder to get a job now than a year ago. They're correct. Job openings have gone down. There's not that hot labor market that we were talking about maybe a year or two ago where it was hard to keep up with the demand that companies had for labor. That narrative has gone away, not just from what we hear in the news and from what we hear from companies, but also from what we see in the data.
And then the other area that we've really seen a softening, maybe even, aside from whether you have a job or not, there's all these kind of subtler ways that the sort of labor demand has, softening has kind of manifested. For example, the share of workers, we ask, on a quarterly basis whether employed workers, whether their company has too many or too few workers, and it's been shifting increasingly towards too many as opposed to too few, which is very different from a few years ago when we had a labor shortage. There's also things like fewer hours worked, and the quality of the jobs that people are getting in terms of how many hours are being offered. There's more part-time work, it looks like. So there's a bunch of these other ways where, yes, if you just look at sort of the binary question of does a person have a job or not, still we're in pretty good shape. You look at the unemployment rate, it is still pretty low, 4%, a little higher, that's not bad at all. But the quality of the job, how much you're earning from it, how busy you are, how secure you feel in that job, these are concerns that I think are maybe more top of mind for a lot of workers and job seekers these days.
And that I think that's what the Fed is really worried about is just the softening in the data because when we look back in history to times of more severe unemployment, it always kind of starts the same way. We start to move in a cooler direction. It might not be so bad today when you take a snapshot of the level, but when you start to move in a cool direction, that can quickly grow out of hand, which is why it's important to, tackle those interest rates before it really chokes the economy too much. So, this might sound obvious, but obviously having a job is important to all of us because we earn a wage and that's how we feed our families, earn a living, and make it in this economy. So, can you want to talk about a little bit how wage dynamics have changed over the past couple of years? Because it looks a lot different today than it did even a year ago.
Yeah, and there's a lot of interesting sort of findings we saw there. I mean, for one thing, wages, as we kind of alluded to at the beginning, talking about spending, as the cost of living has gone up, wages have been a major concern for workers because for most people, for most households, what you're earning from your job is the primary source of income. And there are other income sources, but that is by far the biggest and most important one. So wages initially weren't keeping up with inflation, then they caught up, but people had lost savings. So the high cost of living, which stays high even as inflation cools, is very top of mind for workers. And we see that it's affecting their behavior in terms of sort of how driven they are in the labor force, what they're seeking, what they're trying to earn. A couple interesting trends that stood out. One, we mentioned how job openings have cooled. The number of active applicants, or the share of adults saying they're actively applying for work, that has not come down. That's got very elevated and has pretty much stayed elevated. Maybe not at its peak level, but it's still very high. A lot of people are still looking for work, whether or not they have a job already. Corresponding with that, we've actually seen an increase in multiple job holders. And remember, I said there was a lot more part-time work. So how I'm kind of tying this all together, it kind of looks like people are very concerned with the cost of living, because we also ask why they're applying for work, the active applicants, and wanting to earn more money, wanting to have more job security. These are top reasons. So even those who have a job, sometimes it's only a part-time job or their hours got cut. So they're becoming a multiple job holder. And also we've seen a growing share of workers saying they want to work more hours than they're getting. So there's all these signals that are really suggesting to me that the high cost of living is continuing to put pressure on workers to maybe not even just find one job, but two jobs or however many they need to keep up with prices.
And one thing that from the report that I found really interesting, similar to this concept that we're talking about of, job openings going down, the hot labor market cooling off, is that job switchers, there was a huge premium on job switchers earlier on in this pandemic recovery than there is today. So now the job switchers and job stayers, the rate of increase for their wages has become, it's still advantageous to switch, but not
Barely,
nearly
yeah.
as much as it used to be. So
Yeah,
that
no,
was,
that's a great point, because that is a huge difference. And if you think about what that means for these active applicants, if there's less of a premium to switch, then if their goal is to make more money, they're kind of losing that, let's say you have a job and you're applying for other jobs, maybe with the intent of earning more money, or in most cases actually with the intent of earning more money. If you bring, whatever offer you're going to get, there's less of a premium to switch. And if you do get that offer, bring it back to your company, they don't have much incentive to raise your pay to keep you, because labor demand has softened, and actually you might be doing them a favor, because yes, layoffs haven't picked up, but firms are kind of letting their workforces, shift size and not necessarily rehire.
and we have seen that manifest in our data as well, because the share of workers who say that they think that their employer would give them a raise has really come down in the past year, which I think is also interesting. People basically have less confidence that they would be able to get a raise today than they were a year ago and 2 years ago when they go and ask their boss for a raise. So I think all of these little signs just show that the bargaining power of the worker has definitely reduced. We're definitely not in the world today where, labor is so tight that they have so much bargaining power to get those increased wages. I mean, in part, it might be kind of what the Fed wanted, because sometimes part of that wage growth does feed into inflation, especially things for services or things that have high labor costs. But we don't want it to slow too much, basically.
Yeah. Yeah, and the concern is with which maybe we hinted at, but the effects of interest rates are so lagged in when they show up. And maybe we've mentioned this on previous episodes, but that's really the challenge with the labor market. If the Fed could snap their fingers and be like, freeze the labor market as it is today, that could be fine. I mean, like we've said so many times now, unemployment is low. Between that and where inflation is, it could all be fine. The real worry is sort of, and why we're highlighting these hidden soft spots, as I called them in the report, is just are these going to spread? You know, can it's like a slow moving ship, I think is the analogy a lot of people use, and it takes time to move directions or change directions.
Yeah, the analogy is often a cruise ship versus a speedboat.
Yes.
It takes a while to turn a cruise ship and move it in the right
I know,
direction.
and I try not to picture the Titanic because I feel like that's not what we want to envision for this, but
No,
we'll
we
just
don't
say
advance that far.
a regular cruise ship that makes it to its destination, we hope.
All right. Well, there's so many more insights in the report. I highly encourage our listeners to check it out. I'll include a link in the description. But we also have a part two of the report, which focuses on gender in the labor force. And we're not going to get into it too much today, but do we want to talk about it really briefly before we log off today, Kayla?
Oh,
Um,
yes.
yeah, this one's not the best news.
Yeah. Yeah, so this one of the themes that we kind of wanted to dig into with our special survey that we ran to get a sense of how workers were experiencing the labor market was really looking at these gender dynamics because reports are coming out all the time about how remote work has affected women and mothers specifically, and just we just kind of wanted to get our own reading on how workers are experiencing the workforce and maybe gender differences in the workforce. And the findings were not exactly shocking because it's been well researched and documented in other places. But what I thought was interesting is, we certainly saw a discrepancy in, you know, employment and wage outcomes for men versus women. But the gap really, really was wider for male parents versus female parents. And I thought that was kind of interesting. Really, it looked like dads were just thriving in the workforce, whereas working moms had maybe a tiny bump over women overall, but well behind male parents and not much ahead of women overall, and in many cases behind men overall as well. And there were all sorts of ways we looked at that, and it was pretty interesting. But
Yeah, it's definitely not surprising, but it is kind of discouraging. Something that I've seen that in other research that there is a premium in the workforce on being a dad, but not so much a mom. Some of that could be explained by also maybe, some moms are part-time or drop out of the workforce, and
yeah,
maybe dads feel increased pressure, but also some of it could be just, you know, some unfortunate labor market dynamics where moms fall behind in terms of their career when they become the primary caregiver. But that is also another full report. That one is not out yet, but keep your eyes peeled for it because Kayla includes a ton of very interesting charts and breakdowns of how that dynamic plays out in the labor force. Well, anyway, thank you so much, Kayla. This has been a great discussion. And I'm sure we'll talk about labor again soon because, as we mentioned, it's very important right now to see where we're headed overall as an economy, and it affects all of us in terms of how we can pay for our lives. So hopefully, the Fed cutting rates will help out with that. We have another meeting coming up on November 7th. Largely, everyone expects the Fed to cut again, but only by 25 basis points this time. But it might depend on how inflation continues to play out because there was that hotter than expected CPI print in this past month.
yeah, and a lot might depend on what we see in the next labor report, which
True.
from the BLS. So we will see jobs numbers before the next meeting. So that I assume will be a big factor in their decision, along with what's happening with inflation.
Definitely. Okay, well, thank you. Bye.
Thanks, Sophia.